the StockMiner.com studios in the Black Hills of South Dakota. I'm your Stockminer Brian Johnson, and let's catch you guys up. Now, we've had a couple of very hard pushes to the upside, followed by a couple of very soft moves back down. Why? Well, number one, we're entering the end of the month. We are now into August, starting tomorrow. Number two, more importantly, the Fed talks tomorrow. We have a lot of very big, very interesting information coming out tomorrow. We have the ISM index. That should be very interesting. The last time it was below 50. They don't like it to be below 50, so we'll see if we get a second heaping of that. And then more importantly, the Fed. Apparently, that's what the big news has been about lately. They came out and said they were going to try to save the euro, so they're expecting the Fed to maybe say something tomorrow that might help with the whole, oh, yeah, we're on board with that as well. Anyway, we'll wait and see how that all transpires. But the last 2 days, first days of this week, have been setting themselves up for, I believe, tomorrow. So we should start seeing some really good movement into tomorrow and then the end of the week as well. So I would say that Fed talk isn't until like 2:15. So from the point of that, we'll see some good movement probably from the ISM. That's going to be at 8 a.m. Eastern. And then after the Fed talks, look for some movement maybe into that last hour and a half of trading. If not, if we don't get anything major, then definitely look for something Thursday, Friday. We should start seeing some real acceleration come into the market. Now up or down, we don't know yet. We're going to talk about that today. But as from what we've seen, it's been straight up, and now we're pulling back ever so slightly, waiting for that major news to come out. So we talked about looking and waiting for breaks above this. If you guys did that, great. You played it perfectly. That's exactly what you want to do in situations where we're just wandering sideways. Let's look at it on a daily, and you can see it in the bigger picture. Look how beautiful that was. When it broke through the top of this thing, that was your opportunity to look for a long or get long. Now we're kind of starting to pull back. So if we see any more further downside action tomorrow, I would expect to find some support probably in and around this little 12,950 area. All we're doing is coming back to retest this. If it holds, that's very bullish. So be watching that tomorrow in your trading. If we blast to new highs, that's your opportunity to try to get long. But we've had this good opportunity, and now we're going to sit here, we're going to wait, and we're going to see if we can't play this thing even a little bit deeper into the markets. So up or down, don't know. Let's let the markets tell us that with the news that comes out tomorrow. But as you can see, break above this, finally getting up and over this area that we've been contending with since about mid-June-ish or so. Definitely a month's worth of just consolidation, tough, tiring, tedious type trading in through this area. But with the break, gives us at least something to work from. Let's see what we get tomorrow and see if that gets any follow through for the bulls. On the NASDAQ, it didn't actually come back as far as some of the other ones did. It just triangled up in here. But I'm going to tell you guys, and I've said it before, I'll tell you this again, 2660. 2660. Put that on your chart. Don't miss it. That's a good opportunity long. Whether or not it'll get above it and hold, I don't know, because we've tried 3 times. There's another one back here that didn't work. They all failed. But it's still the spot to try. Okay, 2660 long in here. Otherwise, it's just consolidating. It's wandering its way sideways. You'll notice we really went nowhere today on the NASDAQ. Apple looked fantastic today. Had the subscribers long above 580. Was looking to get in above 600 as well, but we gapped above it, so we missed that entry. But Apple's been playing out very, very nicely. However, the NASDAQ hasn't been running with it. So that makes things a bit on the curious side, meaning that the other tech stocks are not doing well right in through here. So everything kind of wandering sideways with the exception of Apple and a few others. But as you can see, basically a triangle, waiting for that to break one way or the other. Really like a long, and I like it over 2660 for the most part. The daily's the same thing. Look at how we've pounded our heads against this overhead level. So I really think that the resolution will come here in the next day or two. You've got to be ready for it. Be prepared to take that trade when you get it. It's definitely worth a shot. From a weekly perspective too, now we're early in the week, but we're hanging out right at that same overhead. This is such big overhead. Keep in mind that we tried to get back above the 20-week moving average. We did last week. Now let's see. I always give the other side, in this case the bears, a chance to reclaim that territory. Let's see if they can actually manage to do that before the week is done. SPX 60, look, right into this overhead. I drew in these 2 lines for you to just clearly show you where we're at. This is very, very clean up and through here. You're looking for presses up above this area. This is a mess. If you want to play in the middle, go short, that's fine, but you're really on your own with that one. I won't give you too many suggestions there necessarily. There's just so much to be looking for in these areas because we've seen this chop, 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 chop for the last month, month and a half now. But way back below here really points it out. We get well below this area down here. Granted, it's a long ways away. We're still 50, 60, 70 points away from this major low down here. But we break it, game on for the Bears. Game on. We have been all over the map with this market. But we start breaking these lower levels, the Bears have got it. If it'll hold up here, stay tight, maybe even see some good news with ISM and the Fed says something happy. They don't even have to say anything good as long as it isn't majorly bad and the ISM numbers are good, I would not be surprised to see this thing run up a little bit more here. So the bulls still have it up here in this area, still hanging out at the overhead. You can see also the pullback from this level up through here. There is a good level of support up in this area, so that's why I'm being cautious with telling you to wait till you get up into these higher areas before you start looking at long plays. Short plays definitely back here, but look at that consolidation. It just doesn't get much more clean than that, guys. This is great TA right in through here. Just beautiful moves by the market, staying in a very well-defined area of chop. Now, where it resolves, how it resolves, still, really, honestly, just anyone's guess. Be very, very cautious with your trading in through here. VIX daily below the 20. Headed up the last few days, but this can turn on a dime. It's really hard to guess this one. Just keep in mind, we're below 20, still complacency in the market. We start closing back above that 20, we're probably dropping in the markets, and that fear is starting to roll back in. So keep your eye on this VIX into the end of the week, especially after tomorrow. Let's see what we get. A 5% move today alone. So even though the markets aren't going anywhere, even though the markets are basically stagnant the last few days, from SPX perspectives, as we've seen on the daily charts, look, the VIX ain't having it. It's been running up for the last couple days. So while the markets aren't moving with it, there is a sense of caution, a sense of fear starting to fall back into the markets before the Fed talk. And it's pointed out very clearly here within the VIX. So we're watching carefully. Now, as long as it stays below 20, I'm not going to panic about it. I'm not going to be like, oh yeah, we're definitely going down. You guys have got to get ready for the bear side. I'm not going to do that to you. It's not the way I trade. We'll wait for the breaks. Let the markets tell you which way to trade. But these are great indicators to be watching. We get closes, multiple closes above the 20 area. Fear's coming back. Fear's coming back. And then we should start to see a push in the markets. And that push, my guess, would then be down if we saw the market get back above the 2021 area on the VIX. Here's the weekly, same thing, just chopping sideways right in through here. We'll see where this closes by the end of the week. But once again, back above that 20 mark, major. That starts to kind of point things in a more major way. Here's FAS. Now, we had some opportunity long here. I gave you some good entries, but we're going to set this up for you. Look at what could be a very nice inverse head and shoulders. We get bullish action in the markets. Look for FAS above 92. If this thing... Now, in a consolidation, guys, I'm going to spread a little mentoring on you here. When you're in a consolidation, head and shoulder patterns, inverse head and shoulders patterns are all over the place. Everywhere you look, you're going to see them. And to be honest, in that situation, I just flat out ignore them. Whatever. They are what they are. I'll identify them and say, hey, look, this looks like a nice inverse head and shoulders. But I'm not figuring targets. I'm not expecting a break above 92 and then a run of 12 points for whatever. I'm not expecting that. If it does, then it's a huckleberry. But I'm really not interested in that right here. Keep in mind, very nice setup. Very nice inverse head and shoulder setup. But what I want you guys to focus on more is less the pattern and more the break. Remember, we had that large break on the Dow up and over its highs, and it ran really hard. Look for the potential FAS. Look for FAS to be potentially the exact same way. If we can get up and over this 92 area, man, that could make for a really nice trade long. It might go up, it might duck back, it might do that a couple of times, but I'm telling you, I would take that trade. I would certainly give it a shot. Even 2, 3, 4 times, whatever it took, I'd give that a shot. Back below 88 would be my mark for you, then maybe to the downside. You might want to look at that for a short, but 92 definitely long. And that also plays out very nicely here on the daily, as we see the 92 area up in here, and we see kind of that 88 area down here. Make sure it kind of closes, or make sure it gets below this 20-day moving average. Don't get suckered into that one. Make sure it's back below the 20-day before you go short on this one. FAZ then kind of giving us, obviously the opposite kind of look. Really like it back below about 2150. Like it back above 2225. So there are your entries. 2225 long, 2150 short. I think that pretty much sums it up. Even looking at it daily, we had this nice rundown channel, blast up. Nice rundown channel, not a blast up. So they are fractals of one another, but we didn't get near the punch here that we did over here. So it's still a wait and see. Look, guys, I can draw two lines. I can contain this price pretty well. It's a consolidation. It's really not worth your time right now. You must be careful with your trades. However, a couple entries for you, give you something to trade off of. Really important for this to get back above its 20-day before anybody has any serious notions of long plays within FAZ. But based on the 60 minutes, there are some opportunities there. Take them if you get them, and that gives you an opportunity to at least trade some ETFs, some stocks along with the markets. Okay, so we got this break up and over the Dow. We don't have that quite yet. Let me just show you this real quick. Here's the Dow daily. Beautiful break up and over its highs. Here's the SPX daily. Beautiful break, up and over its highs, but already kind of back to revisit. Didn't quite have the punch that the Dow did. Here's the NASDAQ. Not a break up and over its highs. Not everything's confirmed yet. Okay, so we've had the Dow break, we've had the S&P then kind of break behind it, and the NASDAQ hasn't. So are we getting, is it non-confirmation and we're going to fall? Is it just a matter of time and everything's going to blast upwards? Nobody knows. You have to wait for the markets to tell you in this scenario. A lot of times you can see something and I can go, oh yeah, man, I love this to the long side. I'm not there. I'm not there with the markets. I'm not there with anything. So if you're long, more power to you. If you're short, great. But I'm telling you, you better be cautious with either one of those because this thing can run either direction right now. It's a very, very tough case to make for a definite up or a definite down. I'd stay very neutral. I'd let the markets give you your entry. Keep in mind in the markets, here's the beauty of the markets. Okay, you can always get back in. You can always get back in. So if you're in the markets right now and you're like, yeah, you know what, he's right, I think I'm going to wait until after the Fed talks, great. You can always get back in after the Fed talks. Yes, you might miss a point here or there, but if it doesn't go your direction, you're going to be very happy you missed a point here or there because that's going to save you a bunch of extra money. All right, guys, I'll leave you with that. Newsletters. You like this type of information? I know I try to do it twice a week, and I'm just not getting it done. So it's coming out about once a week, but if you like this type of information, listen, my newsletter is $28 a month. It's $1 a day. It's so worth your time. Sign up for it, give it a whirl, see what you think. And then beyond that, it's the mentoring. Mentoring. You want to do this for yourself. You want to figure out how to do this for yourself. You got to take the mentoring because it's all about the education. You're not competing against Aunt Ethel down the road. You're competing against some of the best, brightest, smartest minds in the business. And if you don't have the right education, you're at such a loss. You're at such a disadvantage to everybody else in the market that does know it. So give me a call, write me about that. Be happy to send you some information. Maybe it's a match, maybe it's not, but at least you have the information. You look it over. You can call me then about it. We can discuss all the details. It's very flexible. It's all one-on-one. It's just you and I talking amongst ourselves. So you're not in a big classroom. You don't have to fly anywhere. You just stay at your house, and when you're available to work, I work with you, whether it's nights, days, weekends, mornings, whatever it takes. We get it done. So I work around your schedule, and I'm here for you. So write me about that. And otherwise, we'll see you again, hopefully later this week after the Fed talks. I'd love to do a Thursday video for you. If I get time, I'll definitely do that. If not, we'll catch up next week. See you guys.